Hey there, thanks for listening in and welcome to another Ellipsis Drive Podcast. Here we dive into stories of people, companies, and technologies that transform and empower spatial data-driven industries. My name is Rosalie van der Maas, and today we talk about our need for an easy button for spatial data access, management, and analytics within the insurance industry. To dig into this topic, we have Neil Pearson with us today, calling in from Ottawa, Canada. These days running his own consultancy, UiSee, and he has lots to share. So a very warm welcome to you.
Thank you, Rose. Good to see you, as always.
Great. Lovely to have you. Neil, could you grab a couple of minutes to further introduce yourself, your background, your activities, lay it all out for us? We're eager to hear it.
Absolutely. Yeah. Thanks for introducing me. And obviously, I set up my own practice around the insurtech space called UiSee, delving into the nuances of AI and geospatial analytics, specifically coming out of my prior experience of being a chief strategy officer at Betterview and Arturo. And then prior to that, working with the Art of the Possible at CoreLogic, being their VP of Innovation and Data Strategy across that organization for several years. And then prior to that, I was obviously helping, with camera systems and their application across, utilities, government, and obviously insurtech and insurance. So wealth of experience in that's state. Very excited to be on this call with you and talk about obviously some of the challenges around that, creating that easy button, as you rightly say. So,
all right, thanks so much. And yeah, let's dive right in. One of the main questions I wanted to ask you was about why spatial data, historically speaking, is so prone to live across disparate storage and management systems. Why does it always grow to be that way? What's your perspective on that?
Yeah, it's interesting. I've seen it across municipal government. I've seen it across telco, insurance, where I'm in now. So there is this kind of propensity for fiefdoms of data. So in tech speak, data silos, we commonly refer to them. And it's because there's different business objectives which are creating different diverse data sets across an organization. And there's little or no obligation to actually think about A, the duplication of effort, B, how we're going to share this data when we've got it, geospatially or otherwise, and what are the needs of the other business groups that so happen to stumble across the data that's available or suddenly available to them. So, and that's all within the same organization. So on top of that, how is the data checked, governed, signed off as accurate? And that's the reason why a lot of large companies now are taking on board the concept of data governance to actually unpack some of those challenges as you start to curate that data and you start to think about what I'd call a geospatial workflow for that data. So that's the that's the problem that most organizations have today.
And then in that context of these disparate systems or these siloed systems, what is the key reason that they need to become more centralized? And why in that context does data fusion also play a role?
Absolutely. I think there's several key factors that come into play here. I think as we're seeing the ravages of climate change, we require greater data governance to actually address some of those challenges. So, think about the fusion of, raster data sets that are owned by one group versus vector data sets and points and polygons and et cetera, they're owned by others. It's how do you bring all that together in a rapid response to what's going on? And you're seeing that with some of your clients and how you're addressing that today. We're also seeing that AI is changing how companies can source new data types, which helps kind of dust off that old data we talked about earlier. And how do you keep it current? So that's another thing that's happening. Then you've got all these satellite constellations that are flying around the Earth from Earth observation companies that are really challenging the recency of data through the revisits and the refreshes that they have. And we're now getting into that, old geospatial phrase of change detection, which suddenly becomes very apparent now because you can do that very eloquently. So that's another factor. And then through that, and I think Ellipsis is seeing that as well, is seeing there's new geospatial workflows that are available through this new wave of spatial offerings that Ellipsis and others are offering that is challenging those classical ways and avenues of GIS today, which I think is also critical. So what does that lead to? It leads to the need for kind of that greater responsiveness of data sharing, both inside and outside an organization. And that is starting to happen. You're seeing some organizations starting to do that. So hopefully we'll get to that easy button.
So, and this may be a somewhat mean question, but you have a ton of experience and you do consultancy. So what is the right way of governing spatial data as a reinsurer or an insurer or a broker, if you could just got to start from a clean slate?
Yeah, I think there's a number of factors that come into play. And I think I was fortunate back in my early days of doing geospatial work. I was based in the UK in London. We were doing a lot of work for government in the municipal level. And the UK was fortunate that we had the Ordnance Survey. We were a very prolific mapping organization. And they also came out with a British standard. We all hate standards at the best of time. It was called 7666. And it was actually the georeferencing Bible of geospatial data that hasn't ever been replicated anywhere else in the world. And actually, when you look back at that, it actually solved a lot of the problems around what I call property IDs and understanding georeferencing. So if you can understand that effectively and you can centralize that, then you're actually solving a lot of the challenges of where the property is on the earth. So what do I mean by that? So, companies are building that today in North America. They're creating their own, ID ecosystem because they have all these data silos and they need to conjoin them into some form of spatial georeferencing. And if we put it very crudely, a property address is just a textual address. You can say 22 the High Street, but really, where is that in space? Where is that on a map? In a database, it's just 22 the High Street. It has no geospatial construct to know where it is. So now you're seeing that fusion of those textual data sets to a geospatial point or polygon on a map, whether it be a structured footprint for a building, whether it be, in a complex shopping mall in terms of where the occupancy is of those, particular units. So it's a very complex challenge to solve. Then you've got the three-dimensional problem of, if you're in an apartment block, how do you as Perolator or UPS get to the right property, geospatially? So I think those standards have evolved, and I think companies are starting to do that, so that it's solving that challenge. Now, obviously, the reality is that some of that data that you've had in the past is too costly to revive or to re-augment in ways. So you kind of have to embark across that governance to actually re-establish what that source of truth is for that data, and whether it's valid for taking forward and fusing it to other data types to get obviously better standards, better data continuity, and obviously data confidence, which I think is important.
Okay, so that's your pitch to what's the right type or the right way of governing spatial data can look like. How does that map against the reality that you see most? How does it differ?
How does it differ? I think, everybody, if you look at the insurance space traditionally has, a number of, what I call standard ecosystems, standard platforms. Then you've got the new wave of new platforms coming in to address some of those problems. So, ultimately you are, bringing together, through a platform solution, an ability to manage that data in a way where you've done that georeferencing strategy through bringing in, let's say, hypothetically, building structure footprints for the whole of the United States, land parcels for the whole of the United States, and attributing to that all the other information that comes with that property. So it could be the associated reconstruction cost. It could be the property risk associated from natural peril. But it all has the common denominator, which is that property reference, which you actually kind of need to structure. So I think a lot of new wave AI companies are doing that because a lot of the middle market tiers in insurance haven't necessarily had the opportunity to go, fully fledged, spatial and go through these challenges, because it's an arduous task. It's a time-consuming task to actually do it. So if you've got organizations who think prolifically that way, you're obviously in a very good position to actually get the advantage of that. And it should be seamless. And and to most it will be invisible to them because the solutions are there. So I think that's where we're kind of heading in that direction.
Mm. So, I mean, it certainly sounds logical that you want to connect the data about a property and about the general vicinity of that property to that as a physical geographical object. That sounds logical enough. And I like what you're saying about like the types of companies that try to come in and solve these challenges. But it also relates to another question I had for you, which is around advanced analytics and spatial data. Specifically, where are these analytics currently being conducted? Like,
Yes.
where is this intelligence being hatched when you look at the P&C insurance industry? Where is it happening today?
Yeah, that's a great question. And I think there's kind of three tiers that I'm seeing. So the majority activity we're seeing is in the underwriting business, because obviously it helps manage the risk and the propensity of natural perils through what I call traditionally rate filings for wildfire, for hail, and for hurricanes. So we're seeing a lot of focus in the case of AI to heavily help and assist that area in terms of what is the vulnerability of that property, what is the resilience of a particular home or a commercial building to these new factors that are impacting our daily lives through climate change. So we're seeing a lot of focus around that. So as part of that, you're also getting a lot of imagery analytics. So to have currency of imagery and have that available to you within centralized capabilities, you can start to assess the condition of a particular home, whether it be the roof, whether it be the rear yard of a property, whether it be the neighborhood itself. So you're getting more kind of fresher data from the traditional data sources, which have become a little bit stale and don't have that refresh rate. So I think you're seeing a convergence of traditional data companies in the insurance space bringing in that AI to actually help with some of that refresh, help with some of that currency, and start to think, well, what else can I do from an AI standard? So what is interesting to that point is that, the data is being centralized and managed, to your point, as Ellipsis, by those AI vendors, because it's difficult and time consuming to integrate into the insurance stack, especially when you're dealing with the tier ones who have strong data governance, beliefs and standards, but it's slow in those organizations for good reason, which obviously we can get into separately. But that's where I'm seeing the majority of the work. And then if you look at the claims space, which is obviously the other side of the loss side of the business, we're seeing a lot of post-cat positioning where there's damage to a portfolio or losses associated with the portfolio. And with the emergence of Earth observation, synthetic aperture radar, we're now seeing that some of those losses can actually be mapped very efficiently on the ground during the actual event unfolding. Now, that will help claims triage because it will help put boots on the ground to establish where they need to be. But there's going to be a change. There's going to be a need to predict and prevent, to actually understand where that resilience comes into play. So you're going to see greater simulation through AI of flood and wildfire in the modeling sense to actually better understand how to put in forms of resilience to protect that insurance book. So there's more to come in this space, as that will traditionally impact loss ratios. So that's what's exciting about data centralization, overlaying AI on top of that, of what you could achieve. And then, dare I say it, we've got, OpenAI, we've got large language models like Gemini from Google, which are also challenging how we look at image analytics as well. So we're seeing now what would traditionally take months to solve an AI model for a particular type of property characteristics for insurer being done in days. And then with the greater frequency and recency of Earth observation imagery being provided by companies like yourselves, very fast, very furious into that kind of spectrum, you can start to see that other AI will become available that will challenge what I would call the traditional black box AI. So that, I think, is going to unpack in the next 12 to 18 months.
And could you, just for our understanding, unpack that just a little bit in the next, from like you say black box AI versus
Yeah,
what's
so I think what's going to happen is you can label and you can train a AI model to do, say, roof detection, roof condition detection in days now, because of the sort of available to you through the AI community and the large language models. And you can actually run that not just against, ortho images, but also other images that are available to actually do both, below the roof analytics on that home to actually understand what's wrong with the home, what's right with the home. And you can do that very quickly, which, traditionally, when I look back at my, AI career in some of the other companies I work with, it's like it does take a lot of time to train and label and train a model to do AI. Now, I think that is being challenged now by virtue of some of these new solutions that are becoming available to the insurers, who can then think about their own data fusion, because they don't necessarily, they have their own data, claims data, they have their loss data, which they don't necessarily want to share for good reason. But now that new AI is becoming available, their data science teams and their data analytics teams could become reinvigorated by virtue of having some of this capability where they can actually build their own AI.
Okay. Right. Thank you. So it's funny, actually, before on this podcast, we had a couple of reinsurers on as well, who actually mentioned that the data fusion of spatial data and non-spatial data within databases was one of their largest challenges. And
Yeah.
you're also earmarking it as something that needs to happen as a part of data fusion and as a motion to start to centralize. Is there a specific piece of advice that you have for that motion? Like, do you see successes or failures for companies that attempt this?
There are definitely successes out there. I'm seeing, organizations, insurance companies who are taking that time to understand what they have in their own organization. They're looking very much at the data specifications that currently exist. They're looking at how to make them more accessible to other parts of their organization. And then they're looking at a framework to overlay other geospatial data that might come from, whether it be optical imagery, synthetic aperture radar imagery, whether it's actually challenging some of the use cases that they need. Because part of the challenge is you can have great tech, but if you don't understand what the use cases are on the ground that they're trying to solve, that's a big problem. And there's a big gap there where I think a lot of insurers are actually spending their time to actually translate and join the dots between what this tech offers to what they actually want on the ground with success. And I think it's worth taking that time. It might take you 9 to 12 months, but actually is worth that effort, because once you have done that, your speed to react to things is going to be much faster than you would have today if you didn't address it.
That's actually an interesting call to action.
Yeah.
So I wanted to quickly loop back to my earlier question of where's analytics happening these days? As you answered that question, but do we also see a shift? Like, as an insurance company or as a P&C reinsurance company, should I expect the workload to sort of start shifting between analytics providers, model providers, intelligence engines, as well as like your insurance partners and perhaps other reinsurers? Like, how does the division of labor shift or not shift in the next, say, 5 years?
Yeah, I think we've seen obviously a lot of change in insurance companies. Some people have laid off their analytics teams. Some of them have, got a data science team. And I think there's kind of two levels. There's companies that obviously have a reasonable insurance books to manage. They don't have the wherewithal to do what's needed, like a big organization or a big insurance organization. So they're relying on some of these new companies, whether they be geospatial, or whether they be AI based, or whether they be a combination of both, to actually help solve that problem. and at the same time build up an ecosystem. And we're seeing even the big players do this as well. You build up a data hub, you build up an ecosystem that, you know, is a digital hub of collective data where you can go in and then run it against your portfolio and establish the risk, the climate change risk, all those things. So people are waking up to that capability to do that. Now, the question is, do you trust giving your portfolio to and putting it into an independent solution, which brings back the need for the question around on-premise versus off-premise, which, you know, we're seeing and you're seeing as well. So I think if you can do that on-premise, and we're seeing that both with geospatial and with AI, then the trust, you know, for their portfolio not leaving the shores or leaving the governance of an insurer actually are maintained, which are very important, and they should be sacrosanct, you know, can be delivered upon by the new technology. So I think there's going to be a shift into that. And then when you start to see that, yes, you can still maintain your data science team. It doesn't need to be the size of the data science team you once had, maybe not, because you can do a lot more with some of this new emerging, you know, AI language models and so forth that will allow you to slice and dice data very quickly, deal with the use cases, you know, admirably, and then obviously look at how you can impact some of the changes with some of the other things that are happening in the space, which is being driven by Earth observation, being driven by, you know, simulation companies looking at flood and fire modeling and things like that. So I think there's a lot of excitement. It's just how do you channel that is a key question. What do you tackle first is also a key question as well, as you start to kind of, you know, unfold a strategy around this conundrum. So
yeah. So on that train of thought, we all know that the insurance business moves slowly, and as you mentioned, for good reason. But at the same time, there is plenty of reason to want some change. I know in a previous podcast, it's been said that insurance is in a crisis at this point in time due to the changes that climate change are throwing at us, and we need to respond rapidly. Could you paint me the gist of a roadmap as to how to balance the need to run a stable business versus the need for rapid change? How do you marry it?
Yeah, I think it's, you know, it's when you look at it and say, well, where's the biggest challenge for insurers? It's in the loss ratios that they have, because ultimately, you know, any event that happens, whether it be, you know, wildfire or a flood, or even, you know, all the consistent, you know, severe convection storms that are happening across the US, you're going to have obviously heavy losses, and obviously, you know, understanding what the condition of your book is going to be critical. So as a point of reference, you probably want to look at your book of business and say, well, where am I most vulnerable? What is that vulnerability looking like? How can I impact that through resilience measures? And I'm seeing a lot of that happening in places outside of the US, where insurance companies are looking at resilience, and they're looking at it very fundamentally, and going back to even looking at building code on, you know, how we deal at municipal level, and how insurance companies can influence that. I think it's important to actually say, well, how do I influence a zonal or a planning decision at a municipal level? If I'm an insurance company, I think it's quite important for them to do so as you start to build out where that resilience is. So I'm seeing opportunities where if you can impact the loss ratios through better resilience, through better climate modeling, and simulation is important. It's not just about modeling, because you can say, what does it look like by 2050? Great. But can you actually simulate what an event is going to look like? And I think I'm seeing a lot of companies popping up with doing that, which is actually very exciting. And I think once you know that, you can actually start to build in your resilience planning at both insurance level and at municipal level and state level, because what's interesting in certain countries is insurance are working with state and municipal to actually map those things out, which is important when you're starting to think about, do I build on a floodplain? Do I build on a wetland? Do, you know, all those things? And what is the impact of doing a massive development in an area that is prone to higher rainfall or high convection storms and all those sort of things? Those sort of things are coming, I think. It's going to take time, but I think that's perhaps where some of the insurance companies should focus, because that's where obviously the biggest impact on their loss ratios is going to be, because at the moment they're through the roof, and it's very hard to squeeze that extra, percentage of margin to improve your overall, health of the company.
That makes sense. So on the strategy side, overall, it makes a lot of sense for insurance businesses to want to focus on that. Is there anything in the operation side of things that would need to change for them to fully embrace that general strategy? Like, for example, we've taken a close look at how long it can take for a novel piece of data to be truly integrated into business processes. That can take months. So even though there's an obvious business case for wanting to better understand exposure, to get that properly simulated, to understand the risk that you have on your book, and being able to organize your business processes around this. Do you see specific hurdles, or do you have specific advice around this?
I think ultimately a lot of companies are working in certain groups. So what you see is a propensity, oh, we're in with underwriting, so let's start there, or we'll get into claims eventually. I think you have to, and I've seen this with some of the companies I've worked with, or some of the companies that I'm kind of engaged with at the moment, is that they are trying to get that governance at the corporate level. So you actually have to go in and actually explain what this technology is going to do for an organization, test out the hypothesis of where you think the changes could happen, and prove it out in essence before they engage. Because traditionally, what I've seen in the insurance industry when we first started doing AI, was a proof of concept. Proof of concept could take 9 to 12 months, or it could go straight into an innovation lab with an insurer, and then you're basically waiting on them to tell you whether your AI worked or didn't work. But I think there needs to be a greater engagement between the business groups that are managing challenging the use cases with the actual AI vendors themselves, and some of the geospatial vendors themselves, to actually solve what it is, solve these problems. I think I always take the adage, 2 heads are better than 1. At the end of the day, it's like, if you've got the technology and you've got the willingness of the insurer to talk through those use cases, then you're going to have a better solution. I think that's the first step that one could make to make that kind of organizational, change towards something which actually will have a positive impact downstream.
Yeah. And you mentioned before, like that connection to the actual problem that a business is facing.
The insurers are not wanting to do, they want to do that. I think that's part of the challenge. How do you get that communication going? Because obviously, if you're an AI vendor, you want to basically sell them as quickly as possible. You don't want a 9-month duration to which you get a sale of your software or your solution. So how do you do that? How do you do that efficiently, that everybody benefits, is always a challenge, because nobody likes long sales cycles.
Yeah, well, you got to learn to love them in this industry, I do believe. But it sounds like you have also your work cut out for you then.
Oh yeah, absolutely. Yeah.
Thoughts.
No, it's never a dull moment.
I do believe that. All right, so I'm taking a quick peek at our timer here, and I am afraid that with this we are at time. So on behalf of our listeners, thank you very much for sharing your insights. It's much appreciated. And if you're tuning in and you'd like to know more about today's topic, about Neil, about his activities, we'll leave some links in the description so you can find the resources you're looking for. Then a thanks for being here with us today, and until next one.
Thanks, Rose. Take care. Thanks, everybody.